FedEx is one of the heavyweights in this environment, and it provides a portfolio of transportation, e-commerce and delivery services through companies competing collectively.
Operating independently and managed collaboratively under the FedEx brand. It has a market cap of $46 billion, a dividend yield of 0.92% and a PE ratio of 26. I actually wrote that intro, so I should...
You picked up very well from me mid-sentence. Well done. It kind of went in tandem there, which is what was supposed to happen. It
collaborated well, yeah.
Exactly. We collaborated very well, as does FedEx with many different companies. Let's have a look at the share price graph, and it'll just, now that we've got the comparative on UPS.
Yeah, pretty similar to UPS, similar business model. You know, it's targeting similar sectors, also got a big exposure to the US economy, which is very important.
If you look at that share price graph, very similar to what we saw in the UPS fold. Devin, what would make you buy into FedEx or alternatively UPS over FedEx?
So I think what you see there's a quite a sharp spike high. That was results last week, Tuesday, that came out. They surprised the market to the upside. Revenues were really good in that regard. I think share was up 7-8%, which for a company this size is significant. To Byron's point, very, even more focused on the US economy than the previous company we looked at. 70 to 80% of revenues come out of there, and they've got a real...
Which in the previous discussion it was 60% for UPS.
Correct. And they've got a real stronghold on the kind of shipping oligopoly in the US particularly. So they make a lot of money in that regard. The problem, I think, is that this is a higher valuation, right? We said, what, 26 times earnings. And a lot of the good news has been priced in. So nothing wrong with it. But I think
relatively speaking, it's too expensive.
You're probably chasing it a bit, right? So yeah, I like the business. Revenues are growing fantastically, almost 20% for the full financial year. Made a good acquisition in TNT Express. So that was these more short route deliveries that are adding nicely to earnings. But yeah,
for a company of this size to still be achieving double-digit growth, and you're saying 20% for the full year.
Well,
that
part
is
of that
impressive.
is the new acquisition coming in.
So
yes,
not all organic.
So market did like that, and it did exceed those expectations. But where to from here? I think maybe a bit of normalization would be safe.
Byron?
Yeah, I mean that 26 times earnings does show that there is quite high expectations here. Like Devin mentioned, that TNT Express has been pushed in nicely, and again, that's focusing that business to consumer business. That's where everyone is looking, because they do have a fairly sizable freight business, but it's becoming less and less significant. They've got FedEx Express, and I think that's sort of delivering across the world, basically. So you can deliver a parcel from here to the UK using FedEx. So again, it is very cyclical and very reliant on variable factors such as currency movements and the oil price.
Are we going to call it at this point?
Look, I think the TNT Express acquisition is driving earnings growth at the moment, but there's always implementation risk with these type of acquisitions. I think it's maybe been priced a little bit too richly for my liking. I'm going to go not hot. Not hot. Yeah.
And Byron?
I think for the same reasons that I'm hot on UPS, I'm going to be hot on FedEx. It's even more exposed to the US economy. And like I said, I think there's going to be an upsurge in US consumption, so I'm going to be hot on FedEx.